big topic. So much misinformation out there on where to set up an LLC, how to set up an LLC.
There's like more misinformation when you Google this than accurate information. There's also a lot of information that doesn't apply to you and you just don't know it.
A brand new small business owner, side hustle, starting a business, and everybody's like, ding, I got to set up an LLC. They don't know why, but they're like, I got to set up an LLC. And they go to the web. Oh, I'm supposed to set this up in Nevada or Delaware or Wyoming. Okay.
Let's not forget Elon Musk had to move his company from Delaware because of the BS laws there to Texas. And Delaware traditionally was, if you were going to have shareholders and raise money and be a publicly traded company, Delaware was very friendly to management,
friendly to Wall Street,
shareholders, friendly to Wall Street. And so that's where a lot of people went, is they went to Delaware simply because of that. Now, if you're a small business owner, medium-sized business owner, if you're not going to sell stock and go on a public exchange, don't waste your time going to Delaware unless you live in Delaware or you really love Joe Biden. Even if you did one of those things like setting up in Nevada or setting up in Delaware or Wyoming and you do business in Oklahoma, Oklahoma still wants you to register that Nevada LLC foreign into Oklahoma, and now you're paying fees to the state of Nevada and Oklahoma when you could have just gone to Oklahoma in the first place. Don't waste your time going to these states. Just go to the state where you're conducting actual business. And for you operating business owners, let's say you have the Oklahoma business, Oklahoma LLC, and you're like, I'm starting to do business in Texas as well. Well, when do I register into Texas? Do I need to go into Texas? Do I need a Texas LLC? We can use the exact same Oklahoma LLC. Now, if you just have some customers in Texas, you're not having an office or physical location, you don't have employees in Texas, you can avoid having to register in Texas. Just use the Oklahoma LLC, that's where you're based out of, that's where your office or your presence is. And you can have Texas customers or customers across the country, that's fine. But if you make a physical presence in Texas, you open a location there or an office or you have employees there, now we gotta look at registering that entity into Texas. But it's still the Oklahoma entity. Yeah. It's just what registered foreign into Texas in that example.
I love it. Now let's address some of you other naysayers that are like, Mark and Matt, you don't think outside the box, you don't know what you're doing. Well, I'm an online marketer. I'm an influencer. I'm making money on YouTube. I don't even have an office in Oklahoma. I don't want to pay Oklahoma state tax, so I'm going to set up my Nevada or Wyoming entity because I'm just making money online. Oklahoma gets whiff of this when you're filing your state tax return where you live, and they're like, you made some money here online. What are you doing? Oh, well, I make money online, but my entity is in Nevada, so you can't tax me. Good luck with that one. Oklahoma's gonna be like, you drive on our roads, you go to school here, you go to the gym here, you live in Oklahoma, operate in Oklahoma, you use all of the Oklahoma state services, but you think you can set up an entity in another state and claim all of your money is earned online in this other state because the server's over there. It could be in a foreign country. It does not matter. If you're sleeping on a pillow in the state of Oklahoma, out of the majority of the year, you're an Oklahoma citizen and you're going to pay tax in Oklahoma.
And we're saying Oklahoma here, but we're really talking to you Californians. All right? We're just trying to be a little more subtle about it, okay? Because we know you guys at that 13% state income tax rate. And you're like, I'm in Wyoming, I'm in Nevada.
You don't know about the franchise tax in California, Mark. This is a really good strategy. It works all the time. Really.
And the only way you're going to get out of that California state income tax, even the franchise tax, is to get your butt out of California physically. You can't live there and be a resident there. Yes. Yeah. But we're going to still set up the LLC in the state you're doing business. Yes, if you're in California doing business in California, guys, we're into a California LLC. I know you're like, but guys, there's an $800 annual fee for that. Well, that's the deal in California.
Yeah.
You can't get out of that by doing a Nevada LLC or a Wyoming LLC and then try to do business in California. California is still going to charge you that $800. You're not getting out of it.
The second most common reason to set up an LLC, let's say you live in California and you just bought the coolest little rental property in Tennessee and your kids are going to the University of Tennessee. And so you buy this little rental property and you need protection. They're going to have parties. They're going to rent out a room to their friend. You got to have some structure. You're going to have to file a tax return. Where do I set up my LLC? Where your rental property is.
When you go to close on the property, if you set up an LLC in Wyoming to own this rental property in Tennessee, the title company's gonna be like, you need to register that LLC foreign into Tennessee. Coming back to the same concept, just start in Tennessee, the state where you own the property. Now we have a lot of real estate investors that own multiple properties. Rentals in Tennessee, they got rentals in Indiana, they got rentals in Arizona, and you might have multiple LLCs. You might have an Arizona LLC, an Indiana LLC. You might just have the Tennessee LLC that's registered foreign foreign into Arizona, for example, because you own rentals in Arizona and Tennessee. The last LLC we want to talk about is the charging order protection entity. All right, now this is about asset protection. The reason you use what's called a charging order protection entity is asset protection. Now we're talking about your business LLC or your rental LLC. The primary asset protection you get is if something happens in the business, a customer sues you, or your rental property, a tenant slips and falls and they want to sue you, they can only sue the LLC. They can't sue me personally. They can't get to my other assets. They're limited to that LLC that where that lawsuit arose, either the business or the rental property in those examples. When we're thinking about asset protection for my personal liabilities, what happens if Matt Sorensen does something dumb and Matt Sorensen gets sued and he's got his business and he's got the rental properties? Can they get into those LLCs?
Yes, and this is where the misinformation starts to go crazy. This is where a Wyoming LLC could make a lot of sense. The promoters out there jump onto this bandwagon to create fear and some sort of knowledge that they have and we don't, and then you go form a Wyoming entity, which would make sense in this circumstance, in this third reason, because you've got some assets. You've got some rental properties, some money in the bank, some crypto, equity in your home, and you're like, man, I want to protect that. I'm just going to set up an LLC in Wyoming because that's what I hear is great for asset protection.
We're not doing this if you got 10 grand or 100 grand. We don't think it's worth it or necessary. But if you have enough assets, right, why are we going to build a wall and a fortress around something with nothing in it? Okay, let's make sure there's something worth it here to cover the cost. Like I said, we sell LLCs, guys. We set these up. We want to set them up, but don't really want to set up if it works and makes sense for you. So that's it.
Oh no, I got one more. I just came to me.
Oh, okay.
Our number 4 reason. I can't believe you forgot this.
I probably know what it is though.
Yep. It has to do with self-directing your retirement account.
Oh, we might have 5 then.
Hey, I want to take my IRA or 401k and I want to go invest in a rental property with that. 8 times out of 10, you're going to need an LLC for that. It's going to give you more control, flexibility, the ability to raise capital. And that's going to require a special purpose LLC, sometimes called an IRA LLC. You'll meet with the lawyer, they'll design it, boom, bada bang, and that's number 4.
The last one I was going to add in there, I love the self-directed IRA one, of course. You know I love that.
Yeah.
But is the partnership.
Oh, man, how did I miss that
right?
one? Wow.
The LLC is a great entity for partnerships, but it's going to fall into the same thing we talked about for rental or operating. What type of partnership is this? We love LLCs for partnerships. It's an operating business, okay? I might have partners in this operating business. Maybe your S corporation owns a percentage of that LLC. But again, that LLC with the partnership is gonna be in the business where the partnership is being conducted. Same thing, of course, for the rental property. We're still gonna go down the avenue of where's the rental property located for that partnership.
Yeah, let me give an example, a very transparent, honest example here is Matt and I are partners in our law firm. And so we have a law firm LLC. It employs the paralegals, the other lawyers, it pays rent. It's a normal operating entity, but it's not my personal piggy bank. It's not my LLC that I can do tax planning with.
That's what I keep telling you.
Matt and I both have our own individual S corporation that owns a piece of that LLC. That's another reason for an LLC is to define a partnership. Who does what? Who gets what? Who puts in what? What happens if it goes bad? What happens if one wants out? What happens if we scale and sell?
There's more to the LLC and the structuring in the entities than just the state. There's also more structuring and planning. And that's what our lawyers are doing every day with clients, setting up a trifecta, going over where are your liabilities? Where are your assets? Oh, you have a large brokerage account? Oh, you have another business? Oh, you have a large 401k? We want to optimize all this stuff, lay it out in a trifecta, make sure it's efficient for tax purposes. So you're paying only as much tax as you have to. We want to hit all the tax strategies that go into this when you own a rental property. When you own a business, we're just scratching the surface on the first step of the reason to set it up and what state to go to, let alone like how do I tax this? How do I structure it? How do I maximize my asset protection, minimize my tax liability, and not overcomplicate it either and create too much administrative burdens. So that's what we're doing in the trifecta, and please get over to our law firm at kkslawyers.com. We can certainly help you get that planning done and get going. Or like Mark said earlier, we talked about people who have kind of baked the cake already and then they bring it to us and they're like, I'd like some chocolate in this and some, it's like, oh, okay. We can clean it up too.
Don't cut corners. Don't be Mark Kohler and go to Home Depot and try to become a plumber on a weekend. You will pay a big price on Monday, and hopefully there won't be an insurance claim in the process.